Hello and welcome everyone. Steve here with TradeForexForProfit.com. Today is Thursday, December 3rd, 2020, and we're looking at the New Zealand yen on the 4-hour time frame here this morning. This is a bearish engulf. We are looking at a stop hit of this push point level right here that the market's returned to, and I believe this level is from back in May of last year. So it's been quite some time, a year and a half. Okay, since we've seen this level. I think I'm going to look back. It's been a bit since I've looked back at this, but what I want you guys to notice is the market moves with these pullbacks, okay, and then moves off of these push points. And those, when we're moving down, this is what happens like this, okay. And so these, whoops, I misrepresented that. I apologize. As we're moving down, like this, okay, these are push points. I believe this is a push point. I'm gonna go back and look, but it's just, if you flip it, it's the opposite of what's happening here where the market pushes, okay. And we use these levels as targets, okay. But when we're coming into them, like we are to this level, we use them as areas to take trades from. So we take trades from these levels and we target these levels, okay. In this case, this, based on the size of this signal, I'm going to target T2, which is right here, okay. Now, here's what's interesting. We set up our stop loss and we set up our target, and that governs where our entry is going to land. Okay, in this case it was on a pullback, and I want you to take note that for 6 candles, which is a 24-hour period on the 4-hour chart, the market was at or better, it was in this zone or better of an entry than the original entry that we set up. Okay, so there's ample opportunity to get into these trades the way that we do this. All right, so let me zoom out and I'm going to show you this level. Try to here. Yeah, there it is right there. Yeah, exactly. As the market was moving down, this is where we're taking the trade from right here. Yeah, this was our entry on the pullback. And these were the levels being rejected here, this whole area. And if you notice, this was a push point. Actually, we broke through it twice. It's a breakout line. Okay, the 74. Let me make sure that I'm doing this right. 73.61 all the way to 74.07. Okay, so these levels here were push points. Okay, as the market's falling, okay, we move off these levels, okay? So those are push points. This right here is a breakout. All right. Any way you look at it, this is a significant level, an area, a zone, this whole area right here. As we return to it a year and a half later, we are rejecting that area. All right, so let me go back here. Yeah. That is, in fact, the level right there. Okay. I'm going to get back to this one, and hopefully we'll see this as the last pullback before the final move. But again, I expect, when we get to here, I expect to see hesitation. But I don't think it's going to be strong enough of a level based on the size of the signal that we're not going to make it to T2. So I think this is where inevitably we're going to make the market's going to make it to before it makes a decision of whether it's going to go this way or continue on its path this way. Okay. Hello and welcome back, everyone. Today is Thursday, December 10th, 2020. We're back with the New Zealand yen here, and my apologies, but I was going to record another trade that fired off following the first one, but I didn't have time, and I just left the first one up so that we can discuss, and I'll kind of talk about what happened going forward into this week. But let's back up and discuss this trade off of this prior break level. And as anticipated, when we got when the price reached this push point, the market immediately stalls right here. Okay, just like we anticipated. Then it has enough power to break down through, moves back, retests that area to see if it's going to hold, and it continues its way on down. There was a bounce that missed our target, another bounce, and at this point, at this juncture, I thought the trade was over. We move all the way back up well within the entry line, which I would have never taken a second stab at this, not at this juncture, before falling down, taking the low, taking the profit target, which I left up here so you guys can see it. It might be a little convoluted now, but here's the 2 times profit. Whoops. Let me just delete that. Right here, there's the 2 times profit line. Okay, and as you can see, the price pushed all the way below before forming a reversal spike candle, which is a T1 trade for me, which is right here. So now let me remove this so you can see what followed. And this was a quick entry, didn't have time to record, and I'm just now getting around to following up with this trade here. Okay, so this was a direct entry on a slight pullback. I just rounded down. It's a T1 trade. The 2 times profit target fell well below the T1 target, and as you can see, it just pushed back just slightly enough to take the entry, and off we went. Immediately, that T2 target is you know, that tends to be the overextended realm area. When you look at a target, okay, based on a 2-to-1 risk reward. Here's the one from here to here, the entry to the stop. 2 times that is generally as far as the market's going to reach before at least some kind of hesitation, some backlash before either continuing or reversing. Okay, that's what makes these T2 targets so nice. And if you follow the method of picking push points, stall points, bounce points, you're going to see that this method works nice for you. So if you like what you see, come over, check us out, tradeforexforprofit.com. I'll see you on the inside. Have a good one.